Very good afternoon, guys. This is Raksha from Absolute Analytics, and Indian session is done. A good day today. Godrej CP was the hero for the day today, and now that is done. Let us focus on the other parts and purely technical aspect for XAUUSD gold for this time. No no influence of whatever the geopolitical things are which are going right now. So this video will be absolutely concentrated on the technical analysis of XAUUSD. So I'll show you very simple thing right now. There is one free indicator which we are providing, and you can see on the trading view on in under our profile. That's AAFVG, that is the fair value gap. We have just tweaked in a little bit with the few more adjustments in that. And on the weekly time frame, when there was a fall in on gold prices, or ZAO prices, that was from 2nd of March, and which lasted almost in 16th of March, actually till 23rd of March, the week of that. But it was recovered back. Now the half, that is the 50%, you see the dotted line here, that's the middle value of this fair value gap. So there is a fair value gap existing in the market right now. Along with this video, you'll understand how to use that also, because FVG is not related to take the decision. It is helping you as a supporting indicator, or as a supporting point, in addition to your original strategy, right? So as I'm speaking and as I'm explaining, you will understand how to use it also. So when there was a fall in the gold prices, there was a gap which has been created in the market. That's a fair value gap. The calculation of it is very simple. When the market is stable and it is going in a normal way, and it's a normal calculated way, the low and the high of first two and three, these candles is almost filled in. Like, see, there's a high here, which this high and this low has been filled. There is no gap in between. So whenever there is a gap, like here, whenever there is the low and the high of the candle, not the second one, the first and the third candle, when there is a gap in between that, that is called the fair value gap. And this gap is an imbalance in the market. So mostly the prices are filled in, unless it is related to a very abnormal thing, right? Or unless the gap is to fill in the balance of the market, right? So this fair value gap has been filled 50% already, and we have a resistance here. I have few lines which are already drawn, because without your original strategy, these FVGs are not going to help you to take the trade. It will always help you to understand where are you going, what will be the support, what is the next course of action. So let me just unhide the levels here. First, just understand this: there is a gap on the weekly one. Remember this gap. Now I'm going to the 4 hour time frame, and I'm unhiding the lines here, and you will understand what is going on. Okay, so this is lower AFVG, that is the lower absolute analytics fair value gap. The low of that box, the red box which you saw on the weekly time frame, and the upper line of that, and this is the mid value. So as you can see, the price is hovering at the mid value. That means the 50% of the gap has already been filled. Now what is happening, and what is interesting, and what you should be taking care while taking the entries in gold, is the structure of the market. So did you see the structure here when the prices started to when there was a huge fall, as in January? There was a huge fall, and the prices started to clinging back again, and it almost, if I can see, it is almost at like 78.6% of this fall has been filled. 100% won't be, because the prices are already at the all time high. So now we can expect a little bit lower, like almost at 61.8%, or 70% only will be filled, because there will be the lower ones. Now it is lower lows and lower highs. So there are lower highs and lower lows are being filled. That means the basic trend is bearish. The primary trend is bearish in this. So when there was a breach, it is just a simple line here. It's a simple trend line here. I've drawn it on the 4 hour time frame just to make it more understandable. Like from this point till this point, I won't consider the the wick here. I will consider the prices where it stayed, because it has tested twice here. That's why this one is my second pivot for the trend line. So when this trend line was breached, there was the fall in the March, and it was there evident. And I think I have updated in the channel also about this fall, and it is purely technical at that time. Now again the same thing is happening, the same angle. If I see, I show you the angle if they are permitting angles here. Yeah, this is the angle. Absolutely same angle will be there because it's a clone of that. See, so it is 39.78 and this is 39.78. This is absolute same angle, absolute same style. It was there. The prices are going, so we can expect the prices to go back lower, making again the lower lows. And as the lower the gap of fair value gap which we saw on the weekly one, the lower level at 4603.450 approx, exactly, which I can see on the chart here, with the target of 2025 high, that is 4550. I'll show the demonstration one. See, this level and this level. So these are the levels which I am expecting the gold prices to be fallen, as the lower side, the downside targets of gold. Okay, a big, very tiring day. Excuse for that. Now, so my main bias for gold is bearish. So I am bearish on gold, and almost it has already been rejected the mid fair value gap. So if I'm taking a short side entry in the gold, then these levels will be my stop loss level. So my stop loss level would be between 4,800 to almost at 4,840. 40 USD is a range, is a resistance range. So if you are a conservative trader, you're not as aggressive trader as I am, so you can wait for another retest of this level as this resistance and then go back. The invalidation is between this level 4,800 to 4,840, because if I go on the higher side, so if the fair value gap is to be filled, it has to go till the levels of the upper channel, that is the 5,009 USD as the target. But as you can see, there is another fair value gap which has to be filled. See, this gap has been filled. This one I'll show you. I'll just draw this and show you. So this gap has been filled. Now the now the time is to fill this gap. So it's already rejected the lower of the fair value gap. Now if it is rejecting, now there has been a bullish FVG. It has taken the support. If the support is breached, this is going to go down till the levels which I have told you, 4,602 to 4,550. I'll write down that for you. 4,602 to 4,550. So these levels, if this support is breached, definitely is going there. And in between the levels of support will be 4,663. The mid of this is 4,620. Then this low of the weekly time frame, that is 4,602. Then the low of this. So fair value gap. Now I understand how to use the fair value gap. Okay, you can use it as the resistances, you can use it as support, you can use it to understand which bias it can go. So as I told you, that if this fair value gap has been is filled and it is breached down, then it will be bearish one again, which is my main analysis for this, for gold. If it is not, if it has breached again the immediate level, or if it has again breached the resistance of 4,800 to 4,040, and this immediate resistance is at 4,856, That is the low of this fair value gap, almost at the low of the fair value gap of daily time frame. Then it will go back till it will recover till 4920, this level, and the high of this, that is 4973, this level, and the high of the upper value of AFVG, that is 5009. Although I would suggest you to draw a normal Fibonacci from this high to this low and check it is where is it the 61.8% right now, because I'm not going to complicate it for you. The main bias, this video is only related to tell you what exactly is the bias of gold as per technical levels, as per technical market structure. If you have any doubt, drop in the comment. I will definitely help you and I'll definitely guide you for that. And for more updates, you can join the channel because I'll be posting this video there also. I'm posting here in the DM. You can DM on Tradingview. Everywhere we are available to clarify any doubts, because we're more into making people understand the market structure than to just jump in for the trades and jump in for the profits. Is there any doubts? If there is any doubt or any confusion, or if there is any contrary view for that, feel free to share your charts, feel free to share your analysis, and feel free to ask questions regarding any doubts. On that signing off, and let's make good profits in short side this time. I'll be updating when I'm going short for this.